All right, the markets have faded the up move for today, but technically there's really nothing to worry about. They're still strongly positioned above key bullish structure. Tesla, I shouted it out yesterday. It went higher today, but remember, it still has to reclaim the 8-weekly EMA. It needs to close above that on the weekly time frame to confirm that it can continue to climb. This is the most important week for earnings. Wednesday, the big hitters show up and tell us what's going on. Microsoft, Google, Amazon, Meta, and SoFi is reporting earnings on Wednesday. And then Thursday, Apple, Eli Lilly, and SanDisk are all on watch. In addition to that, 2 p.m. on the same day, we're going to be hearing for the last time from Fed Jerome Powell. There will be no rate cuts, but he will be giving us a tone check on his view of inflation at this moment. Probably, I think he's going to be hawkish. I'd be surprised if he was dovish. We're dealing with the impact of the war in Iran and other constraints on supply that should continue to put pressure on inflation. I'm sure that's what he's going to say. Let me know in the comments if you think he's going to tell a different story. Of course, the next Fed is promised to some degree to cut rates, but we'll see what happens later in this year. Panic over POET. Now, there's a lot of drama behind POET. I'm going to give you an overview of my thoughts on what happened and what it means for the stock moving forward. But if you really take a step back and you think about everything I shared, nothing's really changed. This was a pre-profit company that made a mistake with their customer Marvel. They've been accused of breaking their NDA, non-disclosure agreement. And that was a huge mistake because their entire trajectory is based on them working with the hyperscalers. And these companies, their edge is their technology pipeline, and POET just got kicked out of Marvel's. Now, do I think this brings an end to the company? I would say that I do not know. I know that credibility has become an issue, but it's yet to be proven what they've done. And if Marvel doesn't turn around and actually go after them in courts, then more than likely this whole thing would blow over. Now, I just want to highlight me calling out POET to the community. This was called out as a buy between $8 and down to $5. And it went up 200%. And every time I ever talked with you guys about it on this show, it didn't drop, it went higher each and every time. Now, you have heard me say many times that you need to have core disciplines to be able to make money on Wall Street. I've said it's the hardest way to make easy money. Easy money was made on POET by a lot of people, but you've got to trade the trend. The trend was up and it continued to climb higher. Rule number 2, you got to have a stop loss. Did you have a stop loss? Rule number 3 is you have to control your position size, which is actually the strategy I took. I said that I was very excited by this massive run up, this 200% move, but largely I had to watch this stock. I expected it to come back, and this huge move was potentially validation that this was going to become a significant player. Let me remind you that I said in one of my videos that they only did about $1 million of sales revenue, but they were being priced as if they did $1 billion, which means they had to grow their revenue 1,000%. So they had a lot of headwind. They're pre-revenue. It's interesting tech. The character of the executives has come under question and really hasn't been tested over time. Is POET still in play? I think you just have to sit and watch it. If your position size is too big, you probably need to de-risk. If your position size is appropriate for you, then this pullback and what happens over the course of the next 30 days will determine whether or not you should continue to DCA into it. I will continue to cover POET for this community. I actually am relatively okay with POET. This was a setback, could turn into a future buying opportunity. I've seen this happen many, many times where hit pieces will come out on a stock that Wall Street was sleeping on, that runs, they didn't have their bags filled, and then bad news comes out, it gets slapped down, and then you have to watch the volume to see if stealth accumulation occurs over the course of time or whether there is continued distribution. If this thing continues to see distribution over the next 2 months, then I'm going to say they have lost their chance at bringing this tech to the marketplace. There are definitely other leaders in this photonic space. These guys did have some unique tech. I'm still believing that they're going to bring it to marketplace, but we'll see. Let me know in the comments section what you did with your POET. A great number of the people I've seen sold it for massive gains and have since rebought it on this huge, incredible dip. Did you play it that way? Did you run without a stop loss? Let me know in the comments. Okay, let's talk about SoFi. Now, I would love to come out here and be super bullish on SoFi. I do like the stock. I own the stock. The big question is whether or not I believe on earnings on Wednesday, along with the rest of big tech, whether this stock is going to run. Do I believe that it has been unfairly discounted, or do I believe it's been appropriately discounted? Well, I follow the charts, and the big question is, what do the charts say? I'm going to take you into SoFi, and I'm going to show you exactly what I'm watching for and why. It's a little bit of a technical class, but this is the type of stuff that if you keep showing up for these videos, you hit the like and the subscribe, it'll slowly make sense to you more and more over time. Let's go look at the SoFi chart. Okay, I've said many times that this stock is not bullish again until it gets above $20, as marked by the $19.90 reference on the chart. So it's got to close some candles above 20 for it to get bullish and for us to believe that targets between 20 and 30 will be seen again this year. Now, I've also made mention when we were up here that we would come down and hit 16, and this would be the soonest that you would consider buying. And lo and behold, yet again, a beautiful call on the SWJ page, because if you'd bought at 16, it ran up to close to 20, giving you an opportunity to make some big gains. Now, we do have a nice little candle pattern going here. It's a little flag with a pendant at the top. These can break to the upside, and that would push us on the weekly time frame above the 20 EMA, which would really begin to get a lot of eyes back on SoFi. But here's where the problem lies. I've taken you guys back in time when this was in a consolidation period, and this was largely when the stock was available for purchase around $6. And I want to remind you how long it stayed in this sideways area of consolidation, and that during the time that it entered into that consolidation, it did run above the 20 EMA very briefly, only to go on and make a lower low in the coming weeks. It made another attempt at it, and yet again, it went on and consolidated before going higher. Now, what we need to watch is the 45 on the RSI on the weekly time frame. When this thing had sold off and went into a consolidation phase the last time, it repeatedly hit the 45 on the RSI before eventually breaking out. And it wasn't until it had broken above the 45 RSI, hit the 60, came back and hit the 45 again, did it go on to have the move that we all enjoyed as shareholders of SoFi from $6 ultimately up to $30. So here's what I want you guys to see right now and why I'm not terribly bullish on this earnings. Could this move up and get above $20 briefly in the course of this earnings? Yes, absolutely. Do I think that we are ready on SoFi to move back towards all-time highs and continue higher? No, I don't, and I think we're going to have to watch that 45% level on the RSI on the weekly time frame, because this is an area where it can fail repeatedly, and it has to get above, back test, and only then, quite a while from now, would it signal that SoFi is coming back to life and going into a new secular trend. Now, I'm going to tell you guys, I wish I had better news for you on SoFi. Personally, I own SoFi and I would love to see it come up. I really don't intend to sell my SoFi because it's part of a long-term portfolio position. And there's a huge difference between investing and trading. I've said this many times. You have to hold a stock for a generation to build generational wealth. What do you have on the side of your portfolio that you're just holding and buying and not swinging? SoFi is one of those for me. Matter of fact, POET actually is in that category as well. They're long-term positioning, looking for companies that are going to be future leaders once they have established and proven themselves. Now, SoFi is in a very different position than POET, but SoFi does have some headwinds that we should talk about. Let's go over the three biggest problems with SoFi right now, just so that you're aware. If you're bullish, that's okay. There's a number of issues that SoFi is dealing with. One of them is trust. There's a hit piece that came out that said that they were overinflating their revenues. The second is loan risk in this environment. These guys are competitively pursuing loans, and sometimes that causes them to lower their standards to bring those loans in-house. And there's a lot of pressure right now on all the banks regarding what is the condition of their portfolio of loans look like. And so people are concerned about SoFi's in particular, especially in light of how some are saying that they inflated their revenues, that they may have understated their risk on their loan portfolio. And then finally, valuation. You have to remember, SoFi's got an earnings multiple multiple that is still priced for perfection, which means there's a very high standard of success that investors are looking at that SoFi has to meet. Now, I'm not saying that SoFi won't do well. I'm just telling you that from a long-term perspective, after we've had this pretty substantial pullback on SoFi, the charts are not ready at this moment while I'm speaking to you to suggest that SoFi is returning to the top with a V-shaped recovery. Is it possible? Yes, but only on the unknown. If you look at everything that is known, the fundamentals on the charts, you've got to take some caution. For me, SoFi is still in the bucket of accumulation. Very similar to POET. It doesn't mean I don't like them. It just means that my expectations are sober and I'm not going in with short-dated, high implied volatility options on this earnings event. But you can do what you want to do. Nothing I say is a suggestion for you to buy, sell, or hold. Let me know what you're going to do with your SoFi. Before I head out, I've got to shout out the friendly screener. It did it again. Found another 88% winner this morning. Fast Trades live runners pick at 9:37 a.m. SBLX hit the radar. If you took a position, this was an absolute rocket ship, moving up a total of 88% in the morning. After this alerted, not a single red candle beneath the opening price. These are perfect plays that the friendly screener sorts out and finds for you. So let me just tell you that if you do not follow me on POET, get in between 8 and 5, run it up to $16 or $17, put a stop loss in, control your position size. If you didn't do any of that, don't panic. That's the reason why I built the friendly screener. It literally is delivering high-level opportunities that are meeting a criteria of technical indicators that puts them in a bullish or bearish bucket. Check out the Stocks with Josh community. You can come there. You can trade with me or my crown traders. I gave 2 alerts in the GOAT Options channel that both printed. You can come and get the friendly screener picks each and every day. Peace and blessings. I'll see you in the next video.